Welcome to Markets Now. I'm Michelle Rook with Kooima Kooima Varilek. Well, after a mixed start in the grains, we're seeing grains trying to push to the plus side, and over in the livestock, mostly higher, except for some of the nearby feeders. And Brad, thanks for being with us. Let's talk about the cattle market. We had a lower weekly close in live cattle last week, but we managed to hold support areas here at least, didn't we?
Yes, and thanks for having me on. Trying to react to Friday's trade's not easy, Michelle. And I don't have a great explanation either. Why we basically kind of from out of nowhere had this huge pump in the feeder cattle. You just don't rally $4 usually without something.
Feeders were up for the week as well, and they were, there's divergence there. Where did that come from?
Maybe still trying to track down some of the sentiment behind that, but it would seem like it comes from an attitude or an idea, at least here, that maybe we're finally starting to see some herd expansion. I struggle with that a little bit. One of the things that would have been helpful, of course, is to have the July inventory report. But the last cattle on feed report was a quarterly report, of course, and you do get a breakdown of the percentage of heifers and steers that get placed on that kind of a report. And while the percentage of heifers was down slightly from the last 2 years, it still would not have been, but by most analysts' interpretation, to indicate some big wave of expansion. So we're going to have a few less heifers in the last 2 years, but not anything with a lot of drama. But that mood sure seemed to be in the market there on Friday. And so on the back end, or when the feeder cattle do something like that, the back end of the live cattle have a tendency to follow. So you tilt those spreads kind of weirdly, which actually is not really bullish and really not good for the market either. In my opinion, cash feeder cattle remains stubbornly high. And of course, if you put more premium in the back end of the live cattle market, that has a tendency to encourage that sort of a behavior too. So we'll see. To me, the market, it's the middle of November. Box beef is sloppy. It always is this time of year. Yep. We're cleaning up long-fed calves here from the farmer feeder, and some of them are big. And the average weights, you can't deny that. I mean, particularly the weights in Texas and Kansas are way bigger than normal. And so, there's all of that. Now, I don't know, this weight thing, this might just be the way things are for a while until we get into more supply. But I just think the market's going to be a little bit sloppy here for just another couple of weeks or so. And then I remain, optimistic that the first quarter of the year is going to be pretty good.
Yeah, let's talk about that. Because like you said, normally around Thanksgiving, we do see some seasonal pressure to the market. And when you got Thanksgiving a week later this year, that always adds to that. But when do you said you expect it to catch? How much will we see prices go up after this market decides that it is going to bottom?
Well, okay, so the old seasonal gray-haired old guy, for me, was to look for that bottom to come a week before my birthday, which is December 15th. So at the end of the first full week of December, give or take. Seasonals are problematic at best, and especially since COVID, it seems like some of those seasonals have been a little sloppy. But what happens here is, like I said, you're cleaning up the last of the big cattle. You feel like you don't have a lot of leverage. You've got a softening demand scenario because of the nature of the beast. It's Thanksgiving, and it's not grilling season anymore. But then when you get to the week of Thanksgiving, you don't buy meat for tomorrow. These people have to procure it for plans for that are 2, 3, 4, 5 weeks out. So that next feature usually would be the middle meats, would be the Christmas parties, the office parties, the family get-togethers, the New Year's Eve stuff. And actually, that improvement in demand typically lasts all the way until the Vikings are going to play Buffalo Bills in the Super Bowl, or maybe not, but that lasts all the way until the Super Bowl. So you're asking me to pin down prices. It's difficult. I think that the cash market will hold here somewhere in the low 180s. I don't know if it'll be steady or not. I hope it is this week, but I think we got a couple of weeks where we're going to struggle to be much better than steady on the cash. And then I think call me crazy, but I think we got a chance to be near 200 by the end of the year. And I still think we'll be at that, have a chance to test that magical $200 level again, at least during the first quarter. And if we'd happen to catch a little bit of weather, then it'll be even better than that. The weather is changing here through the cattle belt. Big rain in Kansas and Texas. Rain is one thing, but if it turns into snow here, and mud is always an issue a little bit here. And of course, the weather's shifting here in my part of the world today too. So I don't know. I remain. I don't think anything's any different. I don't see that demand has changed. I think domestic demand is terrific, and as we get into tighter supply in the first quarter, I remain optimistic.
You bet. And when we talk about cash, we were down last week, but we only had about 50,000 head negotiated. So the Packers pulled a lot of their formula totals, right?
Thanks for that question, Michelle. I'm a price discovery guy, and I believe firmly that the more cattle you negotiate for, the better your price is. I've got all kinds of data to prove it too, by the way. And it's just, it's no coincidence that the last couple of weeks have seen this huge uptick again in the number of formula cattle versus the number of negotiated cattle. So I don't know how else to preach it. I've said it over and over. Let's negotiate for enough cattle that it makes a difference. Let's get current. And nobody's going to tell me any different than when you've got too much captive supply that's a problem. And obviously they tilted the scale in their favor the last couple of weeks.
Right. Cattle on feed report on Friday. There's already some expectations for some big on feed numbers. Your thoughts?
Some analysts, we're going to be real close to having a chance at a record on feed for that time of year. Interesting, isn't it? So how are we so high? You don't suppose it's because demand's that good, right? To me, yeah, obviously it's some of this analytical stuff. It's lost that the numbers really, well, they're a little tighter than last year, but not with the drama one would expect at these price levels. So the numbers on feed, you have to go back to the fact that it's the smallest cow herd since 1951. Last time I checked, a cow has one calf as a rule. So when you're starting to measure numbers on feed, we've transitioned here the market from feeding 50% yearlings, 50% calves, to where it's maybe more like 80-20, or maybe more than that. So in other words, when you feed a light, you put a 500-pound steer on feed, it's going to be on feed a lot longer. It's going to show up on 5, 6, 7 more cattle on feed reports than if you're putting a 900-pound steer on feed. Okay, so the reason that some of these numbers appear to be bigger than one would think, it's because we've got a lot more lighter cattle on feed for a lot longer time. It doesn't necessarily mean that there's more. It's just that they're on feed longer.
And let's talk about the hog market. We're trying to recover a little bit here today, but we were down for the week last week after making some new contract highs early in the week. The funds are record long. So my question is, was last week a healthy correction, or was that the top?
Hogs are a little whippy, if you haven't noticed. I could give you an answer based on fundamentals, and that answer would probably be healthy correction. Killing a lot less than we thought we were going to kill. That's the fact of the matter. The last hog report, we're supposed to have 2 or 3% more, and instead we've got less. Now, that's only part of the story. I think part of the sell-off on the cattle the last 2 weeks has been excused by the fact that open interest was so high, and that the funds had such a big long position, and that you had it. As you see these funds move, and as the open interest comes down, it's inevitable that the front months lost versus the back months. Look at what happened on the cattle spreads. But when did the hogs participate in that? I mean, we've got an open interest that's higher than it's ever been by a mile. I got to think that in the short term, at least here, fundamentals are okay, but in the short term, you still got a futures market where you're going to have some liquidation of this open interest. It would seem to me, particularly in the front end, specifically to December. But we shall see. They've been a little bit whippy, and the lack of transparency there, of course, is frustrating. It's difficult to anticipate cash moves. It's difficult to anticipate what the pork product market looks like. For goodness sakes, pork bellies were up $18 last night for some reason, whatever. They were down $26 one day last week. So the lack of transparency is there a little bit frustrating for me.
Yeah, no doubt. And the grain trade, as I mentioned, is trying to firm up here a little bit. We did have a down week, though, across the board. We've held support that we've needed to hold, but do we just stay range bound now, or what do you think?
Well, I'm hoping the beans get themselves a little bit off these lows here. Yes, we held our lows, but boy, not with a whole lot of gusto. I have a
No.
little more confidence in the corn. We seem to, if I had to say, could we be between 410 and 435 for a while? Yeah. The funds seem to like that market a little bit. Let's move both markets of the row crops a little higher here between now and inauguration day. And then I would be a little careful, I guess. I know everybody's beat this story to death, about what
Tariff
happened.
concerns
Yeah,
going to
whatever.
come in, right?
I don't know. It's never that easy, but let's see if we don't get a little bit of upward movement. We do have a big crop out here that has to find a home, and crude oil prices are not great, and yada yada. But maybe a little upward movement from here. But I certainly wouldn't. I wouldn't wait for some kind of magnanimous move. A big move. How about that? I don't think we're going to $5. Let me put it that way.
All right. Thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.